Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como. Today is the 23rd of September. The markets had a little bit of a failure to launch day today. Let's look at what happened in markets today. At the close, we saw canola down half a dollar, 50 cents, 50 cents a ton. That's the right way to put it. At 618.10, Minneapolis wheat was unchanged at 567 and three quarter, and that's not even a rounding error. It actually was legitimately right unchanged. Kansas wheat was down four and three quarter at 506 and three quarter. Chicago wheat down a cent at 519 and a half. Soybeans were down 3 cents at $10.09. Corn was down 2 cents at 424 and a quarter. Sorry. Soybean oil down marginally at 49.84. The Canadian dollar dropped 36 points today, down below 72 now. We're going to talk about that in a second. Live cattle down 192 to 236.83, and feeder cattle down 295 to 357.80. Now, I just kind of want to talk a little bit about that failure to launch today. Here's the comparison of today's close versus the data that I sent out in the morning commentary today. Now, even my morning commentary was earmarked or timestamped at 8:42 a.m. So roughly 12 minutes after the open. At the open, these values here were actually better off than they were in that 12 minutes after the open. So they did fade out early in the day. They clawed back a little bit during the session, but then kind of fell apart as the day went on. And as you can tell, finished. I mean, most of these are marginal changes in value, but it did kind of feel like a little bit of a failure to launch today. I do want to mention soybean meal here. We don't talk about soybean meal very often, but as you can see, right at the open, we did see some significant weakness here in soybean meal, and that kind of grinded lower throughout the day. And you could see the high volume periods of the day here, where we saw low, like significantly lower values at the high volume times of the day. That's a little bit concerning. Any move accompanied by high volume is a little bit more trustworthy either direction. So something we want to watch out for. Now, this is a slide that we included in yesterday's video commentary about, Argentina dropping the tax. I think what was kind of left off of our commentary yesterday, but that affects a lot of other ag commodities as well. One of those would be soybean meal and, of course, soybean oil. But soybean meal, Argentina is actually the largest exporter of soybean meal on the planet. The USDA had also estimated that Argentina would increase their exports of soybean meal in this 2025 crop year. Likely that had something to do with the tariffs that were placed on with China. But now that there's no taxes on Argentine ag products getting exported, this may actually increase over time. And so, just to kind of put this in context, this is also, we see the highest amount of the global. Argentina is the largest global exporter, but they're only the third largest global soybean producer. So they do carry a little bit of weight in the soybean products, more so than the soybeans proper. So we could have seen some weakness in the soybean meal today as carryover from the tax news that we saw yesterday. So just something to keep in mind. Here's the soybean oil exporters. Top five of the world as well. Argentina, of course, is number one, although the USDA is expecting a cut to soybean oil exports this year. That may get reversed as a result of these taxes. So we'll see, I guess, what the USDA has to say on their next in their October report. Here's the trade in soybeans over the last couple of days. As you can see, there's been some heavy losses earlier in the week. Friday and then Monday. We did see a little bit of a bounce yesterday, and it kind of faded out again today. So again, a little bit of a failure to launch there on the beans side. I think most of the Argentine tax and the was priced in previous to today. So we could have just seen some weakness as a result of the soy meal complex or the soy meal market as well. Here's December soybean oil, kind of a same thing. Looks a little bit like a failure to launch. Not much change from yesterday at all. And this all kind of wraps into canola, although I would say canola fared better than some of those other soybean complex commodities. We didn't really see canola lose a lot of its value versus the gains yesterday. It wasn't really a spectacular day from any standpoint, like a technical standpoint or anything, but you can see that this support here right around 610 is holding in the November contract, at least for the last few days. Although calling a bottom in this market has been increasingly difficult as this market continues to grind lower inside that channel. But a couple of good days here that we've seen that may signal that the market's getting exhausted from selling to some degree. Here's the wheat complex. Again, the gains yesterday weren't erased by any stretch of the imagination in the hardwood winter market. It looks like we're basing here now around that $5 area or just above that $5 area in the HRW. Chicago was similar. The gains we saw yesterday weren't really erased today. We're still kind of testing that 20-day moving average up here, but not heavy losses in the wheat complex today. Spring wheat market is very similar, although with much less volatility. I do want to talk a little bit about market carry here because I think there's some things we may want to pay attention to, particularly when marketing cash, if that is something that we are looking at doing at this point in time. Here's the canola yield curve or the market carry. You may have seen a chart like this in our videos before where it kind of lays out what the futures price is on the nearby or the November. This is back to canola here, and what those market prices look like as you move forward along the curve. I think that's a good way to understand carry because it kind of makes you think about the incentive to move forward into the forward market. So as you can see here, there's $30 of carry, maybe even a little bit more, $34 of carry to go into the May, even more as we move out into the July. But it's interesting when you take a little bit of a different look at this as well, because those do seem to add up over time. But here, these blue columns here signal how much carry is there between each month. So as you can see, obviously the November has no carry to the November, but the January has $13.20 of carry, whereas the market after, so the March has 1140 from the January, and the May has 970 from the March. So, it's a good way to kind of look at your cash marketing and say, do I want to take advantage of the largest amount of carry for from one month to the next? Or do I want to look at a futures price target and use the yield curve to decide, what target I want to do, if there is a futures month that meets my target and things like that. Now, again, I'm not advocating necessarily for selling into this market, but carry is a popular when carry is nice and wide. And I mean, this carry is about 65% of full carry. That's on the upper end of kind of the high area. High would be somewhere around 75 or 80%. That's probably where traders would be looking at, selling that spread or effectively selling the further out and then buying the nearby in anticipation of a contraction of these spreads. It's a little bit risky to do that in the canola market with it being about 65% of full carry. If it stretches out to 75, I think that could be a reality. But really, when we're talking about farming, we're talking about cash grain prices. And I think if, there is a way to capture these larger carries without necessarily having to stick to that cash price as you move forward. So what we advocate for a lot is selling forward, selling those future months. And then when the market looks like it's got some legs to turn around or there's some good things happening in the market, maybe some technical signals, we actually will use contracts in order to buy back the front month. Because if that carry contracts or that spread contracts, that will essentially provide you with a higher cash price overall. So it is worthwhile kind of separating all of those factors. And then, of course, if you sell deferred, you don't have to take the basis the elevator is offering you at the time. You can wait to see if it improves. Of course, there's no guarantee that it will, but it is an opportunity for you. So something to think about. I do like that in the canola market right now, particularly because obviously these big carries pushing out into January showcase that the market is flush right now in the November, December, even delivery periods. But January forward, it's starting to look a little bit better, meaning, crush plants, elevators, and things like that are probably not full to their shipping capacity for those months yet, hence why there's a big incentive to sell further out. There's a similar thing going on in the Minneapolis wheat market as well. Here, there's particularly in this Minneapolis wheat market, there's a huge carry. This is a big carry. This is like 88% of full carry. There's some very good opportunities to sell forward here. As you can see, there's 70 cents a bushel to go out into the September, maybe 55 cents a bushel. Now these are US as well to go out to the July, or sorry, 55 cents. Again, this is the amount of carry as you climb up the ladder here. So, some really excellent values to be had if you are able to defer your wheat values out, or your wheat deliveries and your wheat cash flows out into the future. Again, you can utilize the same type of strategies as far as selling deferred and using some kind of risk management strategy to get exposure to the front month again. And again, you can use your the time in order to separate your basis and your futures as well. If you have any questions about that, post a comment in the comment box below, and we'll have a discussion about it. All right, let's get into some non-ag commodities here. Here's crude oil. We saw a good day in crude oil today. It broke back above the 200-day moving average. I always like to look at those moves with interest. Although in this market, there has been a number of fake outs here. We saw one at the beginning of September, and then one back at the late July, early August time period. So it's not necessarily a definitive bullish signal on crude oil, but we did see a couple of days of really strong gains here. One of the reasons here is for this recent price surge was a surprise drop in U.S. weekly crude inventories, which kind of added a sense in the market of tightening supplies, particularly amid some export issues in maybe some of the heavier exporters, but not necessarily friendly countries like Iraq, Venezuela, and Russia. Those U.S. crude inventories fell by a surprise 607,000 barrels last week, the EIA said, which compares to the 235 barrel build that the analyst had forecast in a poll done by Reuters. So, a pretty big surprise in the crude oil market today, and that's had prices on the rise. Normally, we would see some gains in the Canadian dollar when oil rises, as we are a bit of a petrocurrency, but that didn't happen today, largely because the US dollar rose today as Fed Chairman Jerome Powell was kind of cautious on his tone on further easing. I think in the statement that they made this month at the Fed meeting, they were signaling that there would be another few rate cuts for the 2025 calendar year yet. But I think Powell is very cautious about the gains that they're seeing in the stock market, and the some concerns around the inflation data. There has been some information that suggests that the price increases as a result of Trump's tariffs are not fully priced in yet to the marketplace, and that's because some of the importers were either absorbing some of the cost of the tariffs, or they were selling through inventories that hadn't been tariffed because they were imported prior to the tariffs. So when those kind of things run out, we could, or the U.S. particularly, could see some significant increases in their consumer prices. All right, thank you for joining us. If you haven't subscribed to this channel yet, hit that subscribe button to get more and more of our information. We appreciate all of our subscribers and all of our commenters and all of our premium subscribers as well. So thank you very much for joining us. We will see you again tomorrow.